Welcome back, everyone. If you are watching this on Monday morning before the markets open, you are exactly where you need to be right now. Because this weekend, something shifted that every gold and silver trader needs to understand. I am not here for political commentary. I am here to give you a clear, structured market analysis. From a market perspective, this kind of event has one very predictable effect on one very specific asset. In the next 10 minutes, I will cover what happened, what to expect at today's open, how to trade it smartly, and what silver is signaling to. Stay with me, because this session is important. This is not speculation. This is a pattern that repeats itself with remarkable consistency. This is not coincidence. This is human psychology at its most predictable level. Now, let me talk numbers. That pullback, if and when it comes, is exactly where your opportunity lives. And the strategy I am about to share with you is built around capturing that opportunity, cleanly and intelligently. Now, I know what many of you are thinking right now. Gold is about to open $30 higher. Should I just jump in right at the open and ride the momentum? My honest answer is no, do not chase. Chasing price in a gap-up situation is one of the most common and costly mistakes traders make. You buy at the top of the gap, price pulls back $15 to $20, your stop gets hit, and you exit with a loss, while gold eventually moves exactly where you predicted anyway. Here is the smarter approach. Let the market open and watch the first 15 to 30 minutes carefully. Observe whether price pushes higher immediately with strong volume, or whether it begins to consolidate and pull back toward gap support. If you see a pullback toward the 2,595 to 2,600 zone, that is your first high probability by area. A clean price reaction from that zone, where gold holds and starts bouncing, is a strong confirmation for a long entry. Your first target on that trade sits around $2,622, $2,630. If momentum continues and volume supports the move, keep a trailing stop and allow the trade to breathe and run further. If gold does not pull back and simply continues higher without giving you an entry, do not force the trade. Wait for a consolidation to form, let price build a base, and then enter on the breakout of that base with confirmation. The geopolitical narrative is strongly bullish for gold right now, which means the overall bias is clearly to the upside. You do not need to fight the trend, you simply need patience and a better entry point with stronger risk to reward. The key principle to carry into today's session is this: buy strength on pullbacks, not on impulse. The market will reward discipline and punish impatience, especially on a day like today. Now let us talk about silver, because if you are only watching gold and ignoring silver today, you may be leaving very real opportunities on the table. Silver is often called gold's little brother in the markets, and for good reason. Silver tends to follow gold's directional bias, but with significantly higher volatility and much larger percentage moves. When gold moves 1%, silver often moves 2 to 3%, meaning the profit potential is amplified, but so is the risk. With gold expected to open bullish today, silver is very likely to follow that momentum higher. The same risk-off shift that drives safe haven demand for gold also supports silver, both as a precious metal and as an industrial asset. Apply the exact same strategy to silver. Do not chase the opening spike. Wait for a pullback. Look for price to find support at a key level, and then enter with confirmation. Keep your position size slightly smaller on silver, given its higher volatility. Silver trades tend to move faster and more aggressively than gold, so be prepared for wider price swings and give your stops a little more room to breathe. The opportunity is real. Just approach it with the same discipline and patience. Now, I need to talk about risk management, and I need you to take every word of this seriously. I do not care how perfect the setup looks or how confident you feel, without proper risk management, even the best analysis can destroy your account. Rule number 1, always use a stop loss on every single trade, without exception. In gap-up situations, price can reverse violently and without warning. Set your stop before you enter the trade, not after. Rule number 2, do not over-leverage your positions during volatile news-driven conditions like today. Spreads widen during geopolitical events. Price gaps are common, and volatility is extreme. Use smaller position sizes and protect your capital above everything else. Rule number 3. Trade with confirmation, not emotion. The news is bullish, the bias is bullish, but that does not mean you enter the second the market opens. Wait for the market to show you its direction clearly before committing your capital. Remember this, the market will always give you another opportunity tomorrow, next week, and next month. Your trading account, if blown through reckless decisions, will not replace itself. Protect your capital like it is the most valuable thing you own, because in trading, it is sweating. It is let me bring everything together for you now. The bias is clearly bullish. Always use your stop loss, never over-leverage in volatile conditions, and trade with confirmation rather than emotion. The opportunity today is real and significant, but only for traders who approach it with discipline and a clear plan. If this analysis helped you prepare for today's session, please like this video and subscribe to the channel for regular market updates and trading breakdowns. Drop your questions in the comments section below, and I will do my best to respond to every one of them. Until next time, trade smart, protect your capital, and stay safe out there. Take care.